Hello guys, just give me a sec, just waiting to see if we are streaming everywhere we need to be streaming. I'm not sure if the YouTube is working, but either way we'll get started in a second. Yeah, let's... Brilliant. I think we're just about to be streaming, so sorry guys if you are watching thinking what's going on, why am I looking at a welcome screen and nothing else, but brilliant. I think we are streaming everywhere now. So welcome to the sharpening session. Apologies that you can't see my face today. I don't have my camera on me today. However, hopefully the voice will suffice to help to illustrate the points that we'll go through today. So my name is Becky. My email address is becky@traddictiv.com, even if my arrow's weird and pointing it out. We also have support@traddictiv.com. So those are two different email addresses that you can get us on if you have any questions about anything. There's also this link here, which is tradewithufos.com/Becky. And from this link, you can get apps and platforms. You can book one-on-one coaching if you'd like. You can also come down here, log in to the free membership and ask a question in this public space, which enables us to answer it in a public space, which means other people can learn from it. You might find the answer to your questions already here, or it might be that you're doing somebody else that favour. So let me know in the chat box. So I've got various chat boxes open, so let me know in the chat box if you have anything in particular that you want to go through, anything in particular that you want covered. These kind of sessions are, in fact, let me go back to the welcome screen so I can just expand on that for a second. These kind of sessions in sharpening, we do over the weekend specifically because they're theory based most of the time. That's because most of the markets that are available for us to trade, obviously apart from the cryptocurrency markets, are closed over the weekend, which means we can't really be placing live trades. So we use this time to go through theory and concepts a little bit more. Now, as I just forgot that I didn't put the disclaimers up on the board there, so there they are. Please read those. But as they're up there and they're up on the top left-hand corner, you can read them, pause the video, read them, however you wish to do that. Again, just to explain a little bit as to what we do on sharpening. Now, we do many different topics. If I don't get a suggestion from you guys in the chat box, I'll have a backup topic. Today's backup topic, by the way, is going to be auto climate. Now, I know we have people that join us that have been trading with our auto climate for perhaps many years now, and you already know it inside out, top to bottom, upside down. And so for you guys, it might be like, oh, okay, why are you going over this again? For some people, this might be one of the first videos they've ever seen. It might be quite hard to go back through the hundreds, maybe even thousands of videos now that we have to go and find something on autoclimate. So since autoclimate is really instrumental in what we use, that's why I thought I would use that as today's topic for those of you that might be newer, or even you've been doing it a while and you just need a refresher or a deeper understanding. Hopefully that helps for you guys across the board there. So I will do that in terms of the topic today, unless you guys tell me in the chat box that you have something that you would rather that I cover. So let me know there in the chat boxes. Again, we could do some trade and trade plan reviews. I tend to do that in the sessions that we're doing live anyway. And again, Q&A. You guys let me know what you need. Okay, so starting with AutoClimate then. And I'm going to go to top, which is our platform, but AutoClimate is available on TradingView for free, on TradeStation for free. It's available on MetaTrader 5 for free if you use the AutoUFOs, but if not, I think it's $20 something. I can't remember actually, not very much as a monthly amount. And then it's included in top. So on most platforms you can get it on, it is a free app. So I'm going through it for those of you that, again, might not have used it yet or might be using it and not know how to. And for those of you that do use it, to give you a deeper understanding. Cool, so I'm just going to check chat boxes as well and make sure I've got everything open. Okay, so AutoClimate is this app down here. Again, for those that might not know, it's these little dots and lines. And if you see, it says very faintly up there actually, AutoClimate. Now, there are many different features for AutoClimate, and I will go through as many of them as I can in the time that we have. There are different applications that you could use AutoClimate for. Again, I'll give you the sort of, what would be the way, like the standard way, I guess, that it would be used, I'll do in the free version, or in this free half of the session. Obviously in the second half of the session, if you've joined us before, what we do is around about halfway is we'll cut the stream to the free places and continue within our closed coaching community, which is where people pay to have access to more of our time for that closed session. So for the first half of the session, I'll give as much as I can in terms of the standard way that we use this, which would be really helpful, especially if you follow a lot of our sessions. In the second half, we'll go into perhaps a little bit more variations, more advanced variations of how you might use AutoClimate. So if everyone's cool with that, again, let me know in the chat box if you're not. Otherwise, that will be what we do today. Okay, so first things first, let's go right from the basics and just explain what these dots are, what the colours are, what they mean. Now, these dots are the most important thing. I know we see lines as well, but it's the dots that's most important. But what I'm going to do is just really emphasize this, make it really big, make it what we're focusing on. Okay, so just the dots for now. If we have a thick red dot, that tells us probability is down. This is what AutoClimate does. It tells us where probabilities are, up, down, or nowhere. So if it's a thick red dot, that is probability downwards. So first things first, we use AutoClimate as the first point of call when we're trading, because there's no point trading something, i.e. buying or selling, if we don't know whether or not to buy or sell. And what might help us decide where to buy and sell? Where the probabilities are. So AutoClimate comes first. It's fundamental in what we do. If we have a thick red dot, that tells us what we need to be doing is looking to sell. If we have a thick blue dot, that tells us we should be looking to buy. Now, by the way, this doesn't mean just press buy or just press sell. There are obviously extra things in our methodology that enable us to be much more specific about this and then figure out where we're buying, where we place our entries and stops, and where we might put targets, and other ways to increase probabilities and things like that. But first things first, let's know whether or not to buy or sell. So thick blue dot is probability upwards, therefore looking to buy. Thick red dot, probability downwards, and therefore looking to sell. Now, if it's a thin dot of either colour, when it's a thin dot, the colour doesn't matter. When it's a thin dot, that is telling us that probability is neither way, that we don't have enough probability in either direction. That means don't do anything. There is no point trading something that we don't have clear probabilities in. Unless you're using options plays where you might be doing a spread or something like that, where you're trying to profit off of price not moving very much, which is obviously a much more advanced application. For most of us that are trading Forex, stocks, futures, even options in directional ways, either we buy it and want it to go up or sell it and want it to go down, there's no point trading it if it doesn't have enough probabilities either way. So those thin dots are AutoClimate app's way of telling us, don't bother. Go and look at something else. Change time frame, change market. Now, what AutoClimate is telling us always, what we need to be most focused on, is the most recent one, because that's telling us what this current candle, this current time frame is doing. So in this case, we are looking at a weekly time frame of a stock called Wabtec. Wabtec. We're looking at a weekly time frame. So what that's telling us is this one now, for a weekly time frame on WAB, Wabtec, we have probability down. It doesn't matter so much really what's come before. These are good. They're helpful for us for back testing. They're helpful for us for maybe a little bit more context. They're helpful for us when it comes to sustainability, which is something we'll talk about in a second. But what's most important is the most recent one. Because if the most recent one is unconfirmed, meaning not enough probability, then we don't do anything. If the most recent one is thick red, we look to sell. If the most recent one would be thick blue, we look to buy. So again, hopefully that gives you a sort of overview explanation of what AutoClimate is and what it's used for. Helps us figure out where the probabilities lie, therefore whether we buy or sell. And we know that by the thickness and colours of the dots. Thick blue confirmed up, thick red confirmed down, thin dot of either colour, not enough either way. So that's the basics of AutoClimate and how it might be used. And it's very, very basic, very, very, easy way of applying it. Now, we can use AutoClimate to be a little bit more specific and add our probabilities as well. So AutoClimate in this case is already telling us that probability is down, that the market is likely to move down. That's what it's telling us. It tells us that, by the way, because what it's doing is it's analysing price's behaviour versus other parameters. So it's basically doing a whole bunch of analysis for us and a whole bunch of calculations for us and coming back and telling us very easily where price is likely to go. By the way, notice I'm using terms like likely to or probable, probability. Just because something is likely to happen doesn't mean it will. Of course, you can have probability down, but price goes up. Or probability up, but price goes down. Of course that happens. And that happens in anything in life, where the opposite of what we expect to happen happens. Same with AutoClimate, same with trading. However, of course, we want to make decisions that are based on what is more probable to happen, rather than what is less probable to happen, of course. So we have our basic application of AutoClimate. Now, this is where we come into sustainability. So you see down here, might be a little bit hard to see, but we have some data down here. We have some numbers. We have some information down here. Now, why? If I do this, I wonder. She says, no. Okay. Okay. I was going to try and zoom in, but I couldn't there. Why do we have these down here, and why they're relevant? Now, what we're going to focus on today is the data that's furthest on the right, which is what we see on top. By the way, this data, if you're not using top, this data might be in the top left hand side or the top right hand side on other platforms. So just look for where you see basically data, some numbers and letters and things like that. Look for where you see that and you'll see what I mean. So we have count and then SDev, which is blue, SDev, which is red, and then current. So what do these things mean? These are to do with sustainability. And what do we mean by that? Sustainability means we might have probability down, but how long is it actually likely to go down for? We might have probability up, but how long is it likely to go up for? And how do we know that? Now, what this tells us is, let's say, for example, we have a thick blue dot and we have a few thick blue dots in a row. This is where what's happened in the past becomes more relevant. We have a few thick blue dots in a row. And let's say it's gone all the way up to, what have we got there? 7, 8, 9, 10, okay? So let's say you've got 10 thick blue dots in a row. Now, what if you knew that normally the market in question, on the time frame in question, would actually normally only go up for 5. Would only have 5 blue dots in a row. And now we've gone to 10. What does that tell us? That tells us that we're overextended, that we have gone past what is statistically likely to happen, based on what statistically does happen, right? If usually, as an average, this market only goes up 5 candles in a row most of the time, well then if it's gone up 10, it's gone way past, it's gone twice as far as what is normal. If it's gone twice as far as what is normal, then we're less likely to see it keep doing that, right? Less likely for this to happen, and more likely to start seeing a change in direction, because that market's been going up too much. It's too expensive now, way too expensive. Because it's gone up and up and up way past what would be normal, which means it's now way more expensive than it would be. So we can use sustainability to not just tell us where the probabilities lie, either just up or down, but to tell us whether or not we have continued probability of that thing happening. So let's say, let's come back out of here. Let me just put sustainability up there again so we know what we're talking about. Let's say this market has got 2 blue candles, and we know that it usually goes to 5. What does that tell us? That tells us that we have, based on statistics, room for that market to continue to go up, because it usually goes up for 5 and it's only been going up for 2. So for it to get to its average, for it to get to its usual state of being, it's still got to go up by 3 candles, which means getting in at this point, I have more probability. I don't just have probability up that it tells me from the dot, but I have probability that it keeps going up, which tells me that it's a more sensible thing to do. So if you use our scans on TradeStation, you'll see some of the time they'll say sensible. And it's literally called sensible because, of course, it's a more sensible thing to do to buy earlier on than it is to buy too late when it's already been going up too much. And if you think about it, all that is a reflection of logic. Something going up and up and up and up and up and up and up, and you buying here is much less sensible than you going, I'm going to buy here when it just starts to go up. Because by the time it's up here, it's not cheap, it's expensive. In the markets, what we want to do is buy things for cheaper than what we sell them for, right? Or we want to sell them for more expensive than what we buy them for. So if we're selling something for more expensive than we buy it for, it needs to go up after we buy it. What's the likelihood that it keeps going up after it's already been going up and up and up? What's the likelihood of it getting even more expensive? Wouldn't it be better to buy it when it is relatively cheap? And we know we can quantify that with AutoClimate. We know that it's relatively cheap because compared to most of the time, it's at the start of what would be a usual move. So it's more sensible that we get in then rather than that we get in towards the end of that move or past the end of what that move would usually be. So talking about sustainability, coming back to these numbers, if it was a thick blue dot, then we'd look at the blue information. SDEV, in this case, it's 8. Standard deviation 8, telling us usually this market would go up for 8 candles in a row. So this is a weekly time frame. So what that means is this market would usually go up, have probability upwards for 8 candles in a row, 8 weeks in a row. Now, the flip side, what if we're looking at thick red dots, which is what we have in this particular instance? Thick red dots, then we look to the red standard deviation. That's telling us SDEV, so standard deviation 4, which tells us that normally this market goes down for 4 candles. Now we can count this one ourselves and know that that's 2 red candles in a row or 2 red AutoClimates in a row. But let's say we had a longer stream of things and it's harder to count them. That's where this latest or this last piece of data is helpful. That tells us the current. How many candles has that market currently been going in the direction that it's going in? How many, in this case, weeks have we had probability down for, in this case, which is 2? Meaning the last 2 candles or the last 2 of our AutoClimate data are confirmed down. If this was to turn now to a thick blue dot, current would go to 1. If it was to continue and come Monday we have a thick red dot again, this would say 3. So the current is just telling us how many candles that market has currently been going in its current direction, up or down. Now, we now understand that thick blue dots mean probability up, thick red dots mean probability down, that thin dots of either colour mean probability neither direction, and therefore we have a good idea whether or not we should look to buy, look to sell, or do nothing. We now also understand that sustainability gives us higher probabilities if we use that in the right way. Meaning, looking to buy here is a much better idea than looking to buy here. Looking to sell here is a much better idea than looking to sell down here. Just makes sense, right? So we can use these different statistics from AutoClimate to give us an idea of where, not just where probabilities lie, but where probabilities are likely to continue to go. So that's the sustainability stats. So the common way of using this then is to go, right, what colour is this last dot? So in this case, thick red dot. Am I sensible? Yes, because it normally goes down for 4 and I'm currently on 2, so I've still got another 2 weeks for it to continue down, so I'm going to sell. That would be the typical application of these things. Or maybe it looks like this and we have, I don't know, 6, right? 6 thick red dots, and we go, right, what's this last one? That's a thick red dot, probability down. Am I sensible in following this? Well, usually goes down for 4, and the current in this case would be 6. 6. So do I want to be selling that? Not so sensible anymore. Maybe I'll look at a different opportunity. That would be the typical application of this. And again, after we come off of this session in the free platforms, we'll continue and I'll show you some more sort of slightly different ways that you might apply AutoClimate in that way. Okay, so we've got that so far. We've got sustainability, we've got probability either way. Now you might be thinking, okay, great. You've told me about the dots. What do these lines mean? What's the point of these lines? What are they doing? Why are they there? How do you use them? So what these lines are telling us comes down to this set of data. Okay, so this set of data is to do with essentially the length of the line, which signifies how far price is away from the EMA. Now the EMA, so let me just get sustainability there off of the screen. So here we are talking about essentially proximity to ideal trading price, EMA. Okay. Now the EMA stands for exponential moving average. Now, why do we care about that? Later on in our methodology, in this case, let's say we would be looking to sell. Later on in the methodology, the question comes in, but where do we sell? Now, we sell at these red UFOs. That's a different discussion, different conversation, but we sell at these red UFOs. We sell it only at the red UFOs that coincide with the EMA, the exponential moving average, which is this line that I'm pointing to here. Why? Because people buy and sell at the EMA price. It's a very common, the 9 EMA, 9-point exponential moving average, is a very commonly used indicator. And the way that it's used is that if price is below the EMA, so let's say price is down here and the EMA is here. If price, so EMA is here, if price were to move up and touch the EMA, people sell. Let's say price is up here and the EMA is here. If price moves down and touches the EMA, people buy. So basically people are buying and selling if price hits the EMA, depending on whether or not it moved up to hit the EMA or moved down to hit the EMA. If you don't understand what I've just said, basically this line is where people are buying and selling. People buy and sell at that line. So we also want to buy and sell at that line, but only if we also have extra evidence, which is where our UFOs come in. So how is this related to autoclimate? It's related to autoclimate because this line tells us how far current price is away from the EMA. So again, why is that useful? It's useful because if that line is huge, then price is quite far away from the EMA. We want to buy or sell around that EMA. So if price is really far away from it, then we're actually unlikely to get into a trade. So there's probably no point looking. If that line is really short, looking like this, or even like this one, right? Tiny, tiny. That tells us price is very, very close to the EMA. Current price is really close to that ideal trading price, which means we're much more likely to be able to get into a trade now, if everything still lines up. So what these lines tell us is basically, is it worth our time to go and do the rest of the methodology? What our scans do, if you use our scans on TradeStation or on top, what our scans do is take out of the filtered results, take out anything that has lines too far away. Or, if we want to talk about the standard deviation, how far price is usually away from the EMA and how far it is now. Right, so we'd be going, okay, if it's further away than what it often is, in terms of how far it would usually move, this is actually coming from ATR, average true range, but how far it would usually move is 1.17 to the upside. In fact, let's do the downside for now because that's what it is right now, so it's red. So it would usually move $1.26 in this case, right, because it's a stock. It's currently only 0.48, so 48 cents from the EMA, meaning, based on what usually happens, it's close enough to be able to come into our trading price within this week, because it's a weekly chart. If it was a daily chart and it was the same numbers, then you'd say, great, it's more likely that I move into this trade today. If this was a 5-minute chart, same numbers, you'd be saying, great, I have probability that it's likely to move in to my trade within the next 5 minutes. So that's all these lines do, is that if it's a really long line, then that's telling us, based on how far it usually moves, it's quite far away from an ideal price. It might take you a few weeks to get back to there. If we want to be getting into trades, we don't want to be necessarily waiting weeks and weeks to get into them. We might be okay with being in them for weeks and weeks, but we might as well place trades that we have probability to get into sooner rather than later, to ride them out for a few weeks, rather than be waiting for weeks to get into it in the first place. So that's what that line is. That line is showing us, basically, the further the line is away, the less point there is of pursuing the rest of the trade, and by going down that methodology further. The shorter the line is, like these ones, the shorter the line is, the more worth your time it is. And again, our scans, if you use our scans, do this for you. So let me show you. So let's say I bring up my matrix, which is where we do our scan here on top. In this case, I'm looking at stock symbols. So I'm looking to trade stocks. Right, look at my filters here. Let's uncheck earnings for now and come to auto climate. You'll notice that my auto climate criteria is already checked. I'm looking at, I want auto climate to be taken into account. In this case, I want the weekly to be confirmed upwards. So I was looking for buying opportunities in this case. This was from my stock session yesterday, by the way, to give that context. I've checked that I want it to be sensible. So I want it to be towards the start of what would be a normal move, which is talking about that sustainability piece. And I want it to be the 9 EMA, near the 9 EMA. So under the auto climate tab, essentially what I'm able to do is filter by each of those three features that I've just told you about. The sustainability data, the colours, the thickness of the dots themselves, and its proximity to the 9 EMA versus what usually happens. So I can filter by this. And that means, so if I uncheck 9 EMA and click scan, you'll notice that there are many stocks. I would argue more than 100. I'm not good at counting that quickly, but yeah, a couple of hundred maybe that come back to me as opportunities that I could be getting into. But that means I might be looking through a lot of stocks that are ages away from an actual ideal trading price. So if I check 9 EMA, essentially what I'm saying is, show me the stocks that have that short line on our auto climate, right? So instead of these ones, I see these ones. That's what I'm saying when I check that box. And then I click scan, and then you'll notice much shorter list. Maybe that's now 50 stocks instead of 100 and something, or 200. Maybe it's 60 or something. I'm not very good at counting it very quickly, but you know what I mean. It's a much smaller list. So now I'm only going to be looking at stocks that are more worth my time to look at. That doesn't mean, by the way, that every single one of these stocks are stocks I want to be trading in, because of course we do have extra layers of the methodology to give this greater probability, decent reward, minimizing our risk and things like that. But at least to even start with, there's no point me looking at trades that are ages away from what I want to be doing. I want to be looking at stocks that are close to what I want to be doing, and therefore my list is smaller because I've filtered using auto climate. I've filtered by what makes more sense for me to look at, which again ultimately comes back to, I want to be looking at trades. So in this case, this was OMCR. I think I clicked something. Trades that have a thick blue or red dot that are sensible. So in this case, this isn't sensible. In fact, if I show you, let me show you. So now I've done this scan. Let's say I click this top one. There we go. So in this case, what I would now be looking at, which is a perfect example of what I've been trying to show you, I am now looking at a stock that has a thick blue dot, probability upwards. Usually this stock would go up for 7 candles on a weekly chart, so 7 weeks, but it's only been going up for 2 so far. So it's sensible, much more sensible thing to do to get in towards the start. And current price is at 146.15. And I can't even see where the EMA price is because they're so close that they're overlapping. The EMA price is at 145.80. So they're very close to each other. You can see there. Current price is obviously the very bottom of this candle, and the EMA price is just underneath it. And that line is practically non-existent. So by using that filter, I've gone, hey, can you make sure that I'm looking at stocks where the auto climate is showing me these kind of data points? And therefore it makes it more worth my time to be looking through at these different charts. Okay, so I think I've gone on about AutoClimate a bit too much now. Hopefully it's given context for those of you that have never used it. You now know why we use it, how we use it, what these different data points mean, what the lines mean, what the colours mean, what the EMA is, how that all works. For those of you that have joined us before and you know how we trade and you know how we use it, of course this might be pretty boring perhaps because it's something you already know. However, what we'll do is we'll now cut the free stream and we'll continue on in the closed coaching to give you a little bit more of an idea of how you might use this in a different way. Still using the same data, but use it for perhaps a slightly different approach or different application of a methodology. So what I'm going to do now, I'm going to cut the stream to the free session, continue within the closed coaching. Anybody that has joined us on the free sessions on YouTube, Facebook, LinkedIn, whatever, you can email me if you have any questions, or you can go to tradewithufos.com/Becky, post your question here. I can then answer it here. We all learn from that space. You can come and book one-on-one coaching if you'd like. You can get AutoClimate from here directly. Like I said, it's free on most platforms. So it's free on TradingView. On MetaTrader, it's free if you use the AutoUFOs. If not, it's $21 a month there. TradeStation, it's free. And on Top, it's included in Top. Everything that we use is included in Top, which is a platform in and of itself. So you can get AutoClimate directly from here, depending on what you use. Again, most of the time it's free to use. Again, any questions, let me know. I will cut the stream now. Hope you guys have a good rest of your weekend. I'll see you soon. I'll be back on Monday morning with a market commentary, so I'll see you then. But those of you in the closed coaching, just bear with me for a second whilst I cut the stream.